Today we're going to talk about SOFI and not only why it's undervalued, but why it's going to run and why interest rates being cut is not the only thing that's going to affect SOFI. We have a lot to talk about in this video, so let's get right to it. So not only the fact that Anthony Noto is a good CEO, he's been the COO in the National Football League, as well as Twitter, and he worked at Goldman Sachs. So he knows how to build a good company, he knows how to manage a company, he knows the financials, he knows how to grow and turn companies around. He's got a lot of experience in the financial world as well as the operations world. But not just the fact that they have Anthony Noto, they're also profitable on the EPS and their price to sales is really good, signifying a lot of forward guidance and growth. However, these are not the only things that are going to affect SOFI in a positive fashion. We also have PMI data coming out on Monday and Wednesday of next week. I believe it's Monday and Wednesday for services and manufacturing. And we also have rate cuts coming up in September, and we're going to have some consistent rate cuts going through the rest of the year. These two things alone are going to help boost SOFI, and a lot of buyers are going to come in and start scooping up shares. And that's needed because there's a lot of shorts that are holding the stock down. Institutions are also sandbagging. But the more buying pressure that's put on the stock, the less likely the sandbagging will be successful and the shorts will be squeezed out. In order to do this, though, there needs to be a lot of buying pressure, a lot of confidence. And with the earnings beating every single quarter consistently, PMI data, interest rates getting cut, there's one more thing that's on the table that's really truly going to affect SOFI in a positive way, and that is student debt forgiveness. You see, during the pandemic, students were forgiven of their debts. They were given 3 years to not have to pay these loans back, and they couldn't be reported to the credit bureau for it. And interest rates could not be tacked on during the period of non-payment. However, Joe Biden, during his presidential run near the beginning of his term, put into effect an on-ramp, giving students time to work their debt back into their finances, into their bank accounts where they could afford it. So they didn't have to really truly set themselves up to start paying these loans back until the off-ramp expires, and that's the end of September 2024. So in the month of September, we have 2 PMI data reports, a possible, highly likely interest rate cut, and the on-ramp is over and students have to start paying back their debts. And I've got some more details on that as well. This is the time. If you have not invested in SOFI yet, now is the time. The earnings coming up in a couple of months is going to be better than the previous earnings. And then the next earnings after that, going the end of the year, beginning of January, is going to be even better. And SOFI is going to grow. Fair value on SOFI is $15. You can get it for $8 right now. I'm going to show you how to sell some puts and get into SOFI. I want to read something verbatim that came out yesterday, news on SOFI. However, before I do that, if you guys are having trouble in the market, whether you're a beginner or you've been in the stock market for a while, we've all been there. If you're struggling and you really want to grow your portfolio, your time, your financial, and your location freedom and live a better life, I would love to help you grow your portfolio. My students in the Discord make anywhere from 5 to 15% their first month, and their second month and third month, they're up 15 to 20%. I have students that started with $8,000 that now have $20,000 in as little as a month and a half. So if you guys want to grow your portfolio, you like the alerts I put out on YouTube, and you want a lot more of those every single week, you guys can join my full training course, Discord, and one-on-one coaching anytime. You guys can sign up at investwithcorey.com, or the link will be in the information box below. I told myself when I achieved financial freedom, I would help others achieve their dreams in the same way I achieved mine. However, this is a very serious mentorship and there's limited spots. So if you are serious about growing your portfolio and your freedom and learning and growing and bettering your life, I look forward to hearing from you. The Supreme Court rejected the Biden administration's plea Wednesday, sought to revive the savings on a valuable education, the SAVE plan to tackle federal student loan debt. In a brief order, the court denied an emergency request filed by the administration that sought to lift a nationwide injunction imposed by an appeals court. There were no noted dissents, CNBC reported. The Education Department issued a regulation finalizing SAVE in 2023. The month after the Supreme Court ruled that the administration lacked authority to implement Joe Biden's earlier loan forgiveness program. The new effort, like the previous one, was challenged by multiple conservative-leaning states. The new proposal has several provisions, including one that would cap the amount people would have to repay for undergraduate loans at 5% of their incomes. Previously, the cap was 10%. Opponents to SAVE say it would require spending of up to $475 billion that was not authorized by Congress. They say it should be blocked for the same reason that the Supreme Court blocked Biden's earlier plan. Under the major questions doctrine embraced by the court's conservative justices, federal agencies cannot initiate sweeping new policies that have significant economic effects without having authorization from Congress. The state argues in court papers that the Biden administration's assertion of unfettered authority to cancel every penny of every loan is staggering. Now, I do agree with this. If you're going to go to college, I feel like you should be paying your own student loans. In an August 9th decision, the St. Louis, Missouri-based 8th Circuit U.S. Court of Appeals issued a more sweeping injunction putting the entire plan, which has about 8 million borrowers on it, on hold. The denial comes as the Biden administration's 12-month on-ramp period for loan repayments approaches an expiration on September 30th, following the end of the former President Donald Trump's pandemic forbearance a year earlier. The Trump forbearance, which began in March of 2020, allowed borrowers to stop making loan payments without incurring interest costs and getting reported to the credit agency. Once the Biden on-ramp period ends, student loan servicers can start reporting payment delinquencies on loans to credit agencies. Biden's on-ramp period, which began September 30th of last year in 2023, prohibited loan servicers from reporting late payments to credit agencies in an effort to give borrowers the chance to work the loan payments back into their budgets after not paying them for 3.5 years. This is going to come as bad news to students that are in debt on their loans. However, to insiders and investors that are investing in SoFi, as well as people who work at SoFi and the officers on the board and all the board of directors for that matter, it's great news because now student debts are going to have to start getting repaid, which is going to be good for their revenue. Interest rates getting cut, which means that's going to be better for the economy and for the stock itself and the company. And not only that, the PMI data and of course their own natural year-over-year growth that's happening while they're under Anthony Noto, who's a great CEO. So this is going to be very good news for SoFi. It doesn't surprise me at all when I see that the fair value for SoFi is $15, and it won't surprise me to see this stock hit $10 or $12 going into October and November. In fact, if SoFi hit $12 to $15 by the new year, it wouldn't surprise me at all. This stock is very much worth $12 to $15, especially considering the future guidance baked into the price. It's worth $8 right now, but with the future guidance, it's worth quite a bit more, $12 to $15. So this is the time to get into SoFi. Even if it takes them until the first or second quarter of 2025, which is 10 months from now, to get staggering results and the stock price goes to say $20, you still stand to make 125% in the next 10 months or 100%, double your money in the next 10 months. Now is the time to get into SoFi. Let me show you the chart and a quick way to sell some puts and explain to you how you can dollar cost average with these puts to add to your position. So here we can see SoFi is on the run. Right now, a fair price to get into SoFi is $8 or $7.50. I don't think we're going to get it for $7 or $6.50 again, especially with that news, because that news about interest rates being cut most likely next month and the news of the debt forgiveness for student loans being stopped and the on-ramp expiring in September. So therefore, that's semi-permanent to permanent good news. Therefore, the chances of SoFi falling below $8 is going to be highly unlikely, and falling below $7.50 is going to be even less likely. It is possible though. So what I'm going to say is a price to pay for SoFi would be $7.50. I would love to get in around $7.50. That's a very good price. But if you're asking me, Corey, well, how do I do that? The price is $8. Well, I'm going to show you how to sell puts to dollar cost average and get into the stock at a lot cheaper of a price. Now, before we do that, let me show you what the put prices are, and I'm going to explain to you why dollar cost averaging via puts is better than just dollar cost averaging. And so let me show you here on the calculator. Let's say you buy 300 shares of SoFi. You buy 100 shares at 803, so that's 803. Then the stock drops. You buy 100 shares at 750. Then you buy another 100 shares at 700. You spent $22.53 divided by 3. So $7.51 is your average cost. However, if you sell an $8 put and get assigned, you'd spend $800. If you sell a $7.50 put, then going out another week and got assigned, you would spend $7.50. Then you sell a $7 put, its price is dropping, but you're selling puts instead of buying, you'd spend $700. Divide by 3, 750. So $1 less per 100 shares, or 1 cent less per share. However, what about the fact that we also collected premium? So let's look at SOFI and see what kind of premium we would collect. Click on sell, click on put. We're going to go out 1 week. We're going to sell an $8 put, and we're going to collect $23, probably $22. That's what we'll get for it, about $22. So what we're going to do is $22.50 was our cost. So $22. And then if the price drops, we're going to sell another put roughly close to the money. Remember, if the price drops to $7.40 and we get assigned on the $8 puts, we could sell $7.50 puts for more than $22. Just like if the stock was to fall to $7.60 and we got assigned on our $8 put, we would sell $7.50 puts, but we'd get less, about $18. So let's just go in between and say it's $20 per put. So that's $62. 22, 20, and 20, 62, as I'll show you here. So now our average cost is going to be $800 plus $750 plus $700. Instead of buying the shares outright like the share buyer, simple, boring investor, might I add, we are selling puts. Our total cost is $22.50 minus 62 divided by 3. Our average cost is $729.33, which is basically $7.29. So we are saving the difference of $7.51 to $7.29, 22 cents a share less. Therefore, our break even is $7.29 instead of $7.51. So just keep selling puts to get into SOFI. It is the perfect way. Sure, in your account, it's going to show you your average cost is $8 on your first assignment, when in reality it's $7.80 because you collected a premium. But it really doesn't matter because you're collecting premium to enter the stock. This is important. If you dollar cost average with puts over the next month, even if the stock price drops to say $7.50 or $7, you can then just buy more shares at $7. So you get assigned at $8, you get assigned at $7.50, and then the price drops to say $7.20, then you can just buy up some more shares at $7.20 and get your average cost way down. You will be in the $7.30 range. And if the price drops more, add more. Use the share buying and the put selling to dollar cost average and add to your position. This is very powerful. If you want to collect more premium and give yourself more time, which I would recommend going out 2 weeks, you could sell an $8 put for $29, or you could go out 3 weeks to September 20th and get $34, or you could even go out a month to the end of September, and this will allow you to collect $40, right around $40. So your average cost would be $7.60. This is pretty good. But if you go weekly, you're going to get about $20, maybe $18. So it's going to be about 30% more, 20 to 30% more going weekly. It's completely up to you. Now you would like to trade. I prefer weekly or bi-weekly. So I will go out 7 days to next week and I will click on sell put. I actually want to sell 15 contracts at 23, wait for a dip tomorrow morning, maybe 25 actually, wait for the dip. I'll put up $11,000 for 1,500 shares and I'll collect $375. And I'm actually going to submit that because that's actually what I want to do. And then I am going to go ahead and sell. I'm going to go 2 weeks out to September 13th, maybe 3 weeks to the 21st, and sell 750 puts. And I'm going to try to collect 16 on these, and I will sell another 15 of these. This will get me another 240, and I'll click review order and I'll submit that. So put up like $22,000 to make $500. And if I get the shares, I'm in. It's perfect. I'm collecting juicy premium. This is, it's $22,000 investment for me, but it's fine because if I get assigned the shares, my average cost is going to be $775 minus the premium. It's going to be 16 times 15. It was like $275, right? And then 25 by 15, $650. So what we're going to do is we're going to look at 15 times 800 plus 15 times 750, 23,250, take away 650, divided by 3,000 gives me a 753. So if all of this happens, my average price is 753, which is not bad, really not bad at all. So that's a great price for SOFI. I'm not going to put my whole $120,000 into SOFI, but I think that, 25K is enough. I believe in the company. Also, I actually had a lot of money in SOFI today. I sold $24,720. I just sold 3,000 shares of SOFI. So I had 25 grand in SoFi until 13 hours ago. So I really believe in this stock. I do. I constantly buy it, sell it, run the wheel, but I have long-term shares I hold in my big brokerage. There's 10,000 shares in the big brokerage, and I will not let those go or sell them. I only run the wheel in the small account because I love making money on SoFi. It's a great stock. If you guys are having trouble understanding what I'm talking about with the options and dollar cost averaging on the price and why it's better than just a simple, boring old stock investor, I offer a full training course, Discord, and one-on-one coaching to help you guys understand things like I taught you in this video. If you guys are having trouble in the market, you don't know where to begin, or maybe you have already started and been doing it for a while and you're just not profitable, or you're having trouble and you want to be successful, I would love to help you. If you guys are serious about your financial wealth and your financial freedom, you guys can sign up at any time, investwithcorey.com right there on the screen or in the information box below. Like I said, my students are up 5 to 15% their first month, and almost every student I have is in the profit and in the green within their first few weeks. If you guys want to make great profits and great improvements like the students you're seeing on the screen, you guys can sign up at any time. I look forward to speaking with you soon. And I also launched my masterclass boot camp. Very limited spots remain in the boot camp. I look forward to speaking with you guys and helping you achieve your financial goals. So like I said, guys, SoFi, great company. Now is the time to get in. This is the perfect opportunity. Dollar cost average, add to your position by selling puts and collecting juicy premiums along the way. This video is over, guys, but I will see you on the next one. Click right there. I put another video up for you guys. And remember, until the next video, let's grow our wealth together. Take care, fam. And don't forget to click this video over here. We'll see you on the next one.